All right. Hello, ladies and gentlemen. Welcome to the Facebook Live Portfolio Cashflow. All right. Another week live together with me for I'm Possible Terence. All right. Now, so let's get our session started now. So if you're here with me right now, you can hear me, you can see me. All right. Can you just drop a note, leave a comment, say hi. All right. And we'll get the session moving. Yeah. All right. Now, and of course, in the meantime, right, if you have enjoyed the sessions, right, or the information that has been shared with all of you so far during our Facebook Live sessions. All right, hit the like. All right, okay, remember, all right, don't stinge on the like and shares. Yeah, all right, okay, thank you very much, all right, for your welcome. Hi, hi, Eileen. Hi, John. Hi, Susan. Hi, Facebook user. All right, there you are. Right on the dot. All right, now, so can you just go to the banner, all right, the website, streamyard.com/Facebook, all right, and then approve your profile once again. All right, you may have already done so, but it seems like it overwrites and restarts every now and then. Hi, Nian. Hi, Hoy. All right, good to have all of you back. And hi, Nelson. All right, good. All right, and let's get ourselves started. All right, welcome, EL. All right, so EL seems like nowadays you're joining us from Facebook and no longer on YouTube. All right, so I see the change over there. All right, now, so in the meantime, let me get the session up and running. All right, so first timers, all right, or all right, if you're labeled once again Facebook user, all right, can you just go to the website streamyard.com/Facebook? All right, you'll see a Facebook icon or a banner over there. Click on it. All right, and then that will approve your Facebook profile. All right, for any comments, right, that you'll be leaving throughout the Facebook Live session. So I'll be able to reply to you, right, on a personal level, and that's also the rules, all right, and regulations of this Facebook Live session, right? If you do want to raise up any questions and you want my replies, all right, okay, I would love to know, right, who I'm actually replying to, all right, okay, now, so if you can go ahead and do that, that'll be really awesome, all right? Thank you, Susan. All right, we've been creating money, haven't we? All right, so let's continue doing that. All right, and I will continue to do so, of course, with all of your support, all right, along the way. Yeah, all right, so like I said, all right, don't stinge on the like. All right, if you're here with me right now, it actually doesn't harm you at all, all right, to just click once, all right, on the like button. All right, okay, now, so if you do find the information useful to you, if you have made money from any of the information shared or the trades that we've discussed, all right, also, why don't you just hit the share button? Yeah, right, because it has helped you, right, which means, all right, it can help your network of friends as well. Yeah, all right, by knowing this information, it may end up being valuable to them. Yeah, all right, so if you can help me do that, that'll be really awesome. All right, in the meantime, I do not want to hold any punches back any longer because I do have a full day bootcamp tomorrow, all right, with a new intake of traders. All right, so I'll keep it as best as I can because it won't be short. You realize I didn't use the word short, right? Because we have to deal with all the option expiries for this month. All right, so it's going to take a while, all right? But, you know, I won't take too much other time, all right, talking about the other stuff, shall we? All right, it's going to be a long session anyway. All right, so let me quickly remove the banners. All right, it's done. All right, and let me go to the disclaimers right now. All right, so this is going to be a live session, all right, and I'll be showing you moves, trades that I'll be taking on my own personal portfolio. All right, so do not take this as any form of personal recommendations to take a trade or do any trades because all forms of investment and trading bears the risk of loss. All right, so you should be aware of all the risks before deciding to do anything, all right, on your own accounts. Yeah, okay. All right, now, so I'm just sharing from an educational purposes, right, of how you can actually simply build a kind of like quite a passive portfolio, right, and still achieve a better than expected returns, right, on a year-to-year basis. All right, so what do I mean when I say that? All right, we're targeting a cash flow of about $2,000 every month, all right, on a $100,000 portfolio, and that works out to about 2%, all right, on a month-to-month basis. So that will make it a 24% return on an annualized basis. All right, and if you can do this passively, all right, what do? We meet up once every half an hour for every Friday, and we do tend to miss out some weeks due to my schedule clashes. All right, if you can still make 24% per annum, all right, I don't think you can complain. All right, because this is as easy, all right, as those monies that you're keeping in the banks. All right, in an honest way of putting it. All right, now, so without further ado, let's go. All right, and the most recent welcomes, all right, over here, all right, you're a Facebook user. All right, so hi TT. All right, I have no idea how to respond to you. All right, because you appear as a Facebook user. All right, now, so please go to the banner. All right, streamyard.com/Facebook. All right? Get your profile approved, yeah? Now, so let's get to the SPY first. All right, so let's get to a quick market update over here. All right, and then we're going to the trades, all right, and portfolio updates, yeah? All right, do bear with me a little bit because these days, all right, both brokerage platforms seems to take a little bit longer to load data, right? And there seem to be more bugs, all right, appearing on their platforms, all right? So I'm just waiting for the charts to load up, all right? So give me a bit of time over here, yeah? All right, it's up. All right, ladies and gentlemen, here we go. This is the SPY. All right, now, so what do we have on the SPY? All right, it's still loading. So what is happening right now is my trend lines, all right, are not appearing. All right, my trend lines are not appearing. I have no idea why. All right, now, but if this is the case, right, it doesn't harm for me to draw one as well. Is this up to date? Right, because it does look weird. There it is. All right, it's out. All right, now, so for quite a while now, all right, okay, the SPY has been trading inside the zone, all right, okay, inside the zone, all right, and then it kind of threatens a breakout, yeah, all right. Why does it look weird? It looks weird. Okay, all right, now, so here's what we see over here, all right, okay, it was trading inside this range over here, all right, it didn't manage to break the 4170, all right, okay, which is the next resistance level, all right, and now, all right, we have the down, yeah, okay, and, all right, if you notice this, right, okay, this is not what we call perfect, all right, okay, but, all right, it is kind of like a negative divergence on the RSI indicator, all right, so now, all right, the RSI is hitting back towards the 50 line. All right, so this is like the line in the sand. All right, if the RSI goes below 50, right, it allows the bears or the short sellers to be more bold. Right, so that means more selling can come into the market. Right, but if the market bounces and the RSI bounces off 50, it means that the current uptrend, right, still has some room to play. Yeah, okay, so that's how you pretty much see it right now. So based on this, right, definitely we are back on track, all right, towards coming back all the way down, at least, right, to the 200-day moving average, all right, and the 200-day moving average right now, all right, stands in, right, the last trading range, all right, the support of the last trading range, which is 392, all right, or 393. So that works out to roughly around 3,900, all right, on the index, and you realize that this is a trend, right, because the market can fall, right, by about 150 points very, very quickly, just like that in a snap of a finger. Right, it fell by 50 points yesterday, all right, and today is down another 30, all right, before the market closed today for the weekend, right, we may end up seeing another 50, 60 points on the downside, all right, that is actually a possibility, all right, because interest rates are still going up, CPI numbers are still very hot, which means that the Fed cannot even just hold interest rates. They have to continue to make another rise. It's just a matter of how much. Is it 0.25? Or do they want to go over so that they can calm the entire economy down again? Right. So they may reach for 0.5, right? And that will hit the market. Yeah, right now. So you may think that all the economic numbers now are very strong, but now for the current conditions, strong is a bad thing. Yeah, strong is actually a bad thing for the market because strong means that the Fed has to continue rising interest rates, which is danger to the market because money is going to keep flowing out. Right, so I just want to touch on this, right, to provide all of you some value, right, for those of you who are turning up over here, right, and also, right, okay, in a way, all right, I can put this across, maybe, right, in terms of goodwill, right, to be able to earn the likes for you to hit the button on the video, yeah, right now. So what do I want to teach you over here, right? What I want to teach you is basically the, how the fund managers act. Now, you must see and understand this. 2 years ago, all right, when when the COVID market hit us. Right, interest rates was around 0 to 1%. Right now, what that means is for safe investment assets like bonds, right, it's only going to return about 1%. Right, and that is not good enough for fund managers. So fund managers try to balance their portfolio with riskier assets and non-risky assets to earn what they call an average return. Right, but okay, investing in stocks is always there. Right, but part of their portfolio was meant to invest in fixed income or fixed assets like bonds. But if bonds are paying them only 1%, that means that they cannot reach their bar or their performance level. So instead, in the last 2 years, what these fund managers did was they ditched the bonds, right, and they increased the risk, right, by taking on more stock exposures. And that is why you started seeing a lot of money flowing into stocks like what they call the meme stocks, the momentum stocks, your growth stocks, like your Teslas, like your CrowdStrikes, like your, there's so many of them that now, all right, they're already beaten, like your Zooms, all right, like, your Spotify's. Why did all these stocks move up so fast? Because money was going into them to chase results, right? That was what fund managers needed to do. And they were willing to do that because the fixed assets wasn't giving them what they need. But now, the situation has changed. Why? Because if they put their money into fixed assets, right, the fixed assets are paying them 4%, right, and climbing higher, right? So, right, without taking risk on some of their portfolio exposure, they are able to earn a 5% return, close to 5%, right? And with the performance on their stock portfolio, right, it earns out a balanced return of anywhere to 10%. That is a possibility. So if you look at that way, right, there is no longer a need for these fund managers to take excessive risk, right? And that is why money is starting to flow out of the stock market, because money is actually now flowing into fixed assets again, right? Because fixed asset interest is getting up, right? So it makes sense for safety, especially with all of you understanding the risk of the market right now, right? The fund managers are not silly as well, right? So they rather start to shift more of their exposure into fixed income, right? Because they expect the markets to go down. Yeah, right now. So that's why you see that a lot of these momentum stocks are not able to go back to their new highs, because the kind of money, right, that was flowing into the market is no longer there. Right? All this money has been leaving. Yeah, okay, it's not coming back. It's not coming back because interest rates are not coming down. All right, okay, better returns can be earned with safer assets now. All right, so people are going to move their money there. All right, now, so I hope you see what I'm talking about. Right, and this is also why you start to see that more money is starting to go into fixed deposits. Right? Do you realize? Right, it's much harder to get yourself into a fixed deposit now than it was before. Right, you literally have to queue for an allocation. That's crazy. Yeah, okay, that's crazy. Right, but it is happening. Right, so this shift only means that money is flowing out of the markets. Right now, so I don't know how many of you actually agree, right, or think that my analysis actually made common sense. Right? If you do, you can leave a comment inside the Facebook Live, right? Or if you think I'm just uttering rubbish, right, you can choose to do so as well. Right? But I'm just speaking from my experience as a trader, right? How I understand the market, right? I want to teach you so that you can become a better investor and not get caught, right, while trading the market. Right? So this is what I aim to do, right, in my Friday sessions over here. And of course, if you're keen to explore your investment and bring it up a notch further, all right, okay, you can explore one of my mentorship programs available, right, that suits your needs, right, and then embark on your journey to your own financial success, right? So that's what we do with our students. We trade every single week, right, together with them. In fact, they trade, right, with 3 of us, right? We are a team of 3 mentors over here in my community, all right, and all our students get to trade with all 3 mentors throughout the week, right? And that's where we set ourselves apart. Yeah, right. No one can come close to us, right, in terms of what we offer. Right now, so with that said, all right, let's go to our portfolio right now, okay? All right now, so the risk is on the downside, but I will not totally eliminate the possibility, right, of another challenge, right, to this high over here of this move, right? Because that would set up probably a real divergence over here, right? And then the market can fall after that. Yeah, all right now, so that may happen. Now, so with that over here, let's go to our portfolio right now, all right, and let's bring it up. All right, so I just pulled it lower. All right, and all right, now we have the WBA stock over here, but you saw that I brought it down to March right now because today is the expiry. All right, we currently have a $39 call option, right, on the stock. As you can see where the stock is right now, all right, okay, this $39 call option is pretty much going to be safe. All right, it's not going to be hit, it's not going to be crossed. All right, okay, so we can just leave it, right, to expire on its own today. All right, now, so looking at it, all right, you see that it's costing you almost zero, right? There's probably no premiums at all, right, for this one. Right now, so let's see if we can use this to capture more premiums, right, for another 2 weeks. Now, 39 strike is not offering anything. So it doesn't make any sense for me, right, to go ahead and target a 39 strike right now. All right, there's no income to be generating. So right now, what do? We sit, right? We literally sit. Right now, this company is going to pay, it's paid a dividend. It's just paid a dividend, right, on 15th of Feb. All right, and the dividend was 48 cents. So I actually just pocketed 48 cents in cash flow. But true to our sessions over here, we don't record it. All right, so it's lost. All right, now it's in my account, but it's lost in terms of this Excel sheet. Yeah, all right, now. So next one over here, Intel, we have a $32.50 call option. Intel is at 27.74 right now. So this call is going to expire worthless today. So it's helped us generate some additional income, all right? And, all right, because Intel has fallen back lower, so it doesn't make sense for us to sell another call option while owning the stock right now. So we'll wait, all right? We'll wait for a better opportunity, all right? And when that comes, all right, we'll seize it again. All right, now, next one over here is Verizon. We have a $43 call option that expires today. All right, we had 16 cents for it. All right, so let's record this. All right, so by today, these two positions will expire worthless. Today is 17, am I right? Yes, today is 17. All right, now, so VZ, $43 calls. All right, VZ is at $40 today. All right, so that is going to expire as well. All right, and VZ has since come off. All right, and the high over here is still at 42. So let's see if we can sell a new call option with a 42 strike to generate some additional income. 8 cents, not yummy at all. I'm not going to capture 8 cents over here. Yeah, all right, so I'll just leave it. All right, maybe if it bounces higher next Friday, we can attempt at it. But for now, all right, I'm just going to leave it. Yeah. All right, so we leave it for now, right? No actions. So this one is going to expire worthless by close of the market today. Right, awesome. It's three down. All right, now HBI, as we all know, right, has collapsed, all right, after its earnings. All right, so now it's back down to 560. All right, I'm just going to hold the stock. All right, I'm still holding the stock because I still think it'll bounce. All right, I'm not so worried about the exposure because it's a very small exposure on my portfolio as well. All right, so I'll keep it. All right, but this means that this call option is going to expire as well. Yeah. Okay, all right, now, so that's it for our stock ownerships. All right, let's go into our portfolio puts now. So we have Pfizer that expires today. It's a 47.50 put option. All right, so let's check out where Pfizer is now. All right, so Pfizer is under the water, ladies and gentlemen. All right, so we are under the water on Pfizer, 47.50. So that's way, way out there. All right, so by the end of today's session, all right, hang on. Okay, now, so for this stock over here, by the end of today's session, all right, I'm going to end up owning the stock. All right, okay, that means I'm going to take the assignment of the stock on expiry. All right, so let's record that down. All right, and this is how it's going to look like, okay? All right, now, so 56. All right, so that's trade number 56. I'll be assigned 300 shares of Pfizer when the option expires today. All right, so the trade entry date will be as of today, 17th of Feb. All right, and my stocks will be paid at 47.50. All right, upon assignment. Now, so what happens, like I said, is it will be allocated, right, the full 100% exposure. All right, now, so this one will expire, it becomes 0. All right, okay, where else, all right, the stock position will come with a 14,250 exposure right now. All right, so when this one expires, I realize all the profits, right, so all the cash flow is captured, right, but I'm, of course, right, on a paper loss right now at this moment on the stock. All right, but Pfizer is still cheap. All right, I have no worries about it. Now it's about sitting and waiting, right, just like the rest of the stock positions. All right, so looky look, right? I'm not perfect. All right, 1, 2, 3, 4, 5, 6. I have 6 positions right now that has converted into stock ownerships. Right? Am I worried? Am I concerned? No. All right, it's still about managing what you have. All right, okay, and right, making the best out of it. Right, you won't ever have a perfect market. You won't ever have that perfect portfolio. Right, but if you can manage what you're dealt with, right, and you know exactly what to do, and still, right, under those conditions, continue to hit your personal goal targets, then there's no concern at all. Yeah, all right, isn't it that way? Yeah, all right. I hope you can see it. Yeah. All right. Now, next, let's go to our portfolio puts. CVS 82.50. All right. That expires today. So CVS. Now, this one is going to expire worthless, ladies and gentlemen. All right. Now, so as you can see over here, CVS right now, right, it's at 88. All right. Okay. It's at 88.50. All right. So that one is going to expire worthless. So do we need to do anything? The answer is no. Yeah. All right. So there's nothing we need to do at all. All right. So all we need to do over here is just to let it. All right. Hang on for a minute. All right. It's ready to let it expire worthless. Yeah. All right. So we'll leave it on the table. All right. So by the market close today, this is going to expire worthless. All right. And we'll pocket our $273 in cash flow for the trade on this stock. That's right. Yeah. All right. So this exposure is going to free up. All right. By market close today. All right, let's go to our next one. All right, so next two positions over here are traded for March. All right, now, so let's see if we're going to do anything. It's a $110 put option on 3M. All right, so we're still sitting around there, which means I'm not closing it. All right, but I can realize the half premium, right, on this trade over here. Yeah, all right, so we're going to realize the half premium, right, on this trade exposure. All right, and what are we doing? Yep. Right. So there'll be no exposures because it is taken over here. All right. Okay. The other half of the trade is recorded in the month of March as well. All right. Now, so ABBV for 135. Where are we? 150. Wow. That's a big jump. Let's see if we can close it. 135 puts. All right. It's only worth what? 26 cents now. All right. 26 cents now. All right. So let's go ahead and close it. All right, now, so ladies and gentlemen, give me a minute, yeah? All right, I in my haste today, I've forgotten to, all right, launch the portfolio. All right, hang on. Oops. All right, give me a minute. All right, give me a minute as I just hit the login process, okay? All right, it's in the procedure of logging in right now, so just give me a minute on it. Of course, in the meantime, right, if you have any questions of what I've said, what I've done so far, all right, please go ahead and leave your comments, all right, inside the comment box, yeah? All right, do not worry about doing that so as well. All right, I'm back. Okay. So looks like we're going to close the ABBV. All right, so the 17th of March, all right, we have two of them. All right, so we're going to close it, all right, today. All right, because we sold it, all right, just 2 weeks ago for 117, all right, and we can capture more than 80% of that premium, right, by closing the trade today. So we can close it for 27 cents. All right, so here we go. All right, so I just bought two of those options back, the $135 put option, and I paid 27 cents, right, for closing that trade. All right, so let's go ahead and record that down right now. All right, now, so many of you have this question, all right, of, Terence, when you sell for more than that 1 month itself, right, how do you actually recognize the profits? So many of you actually said, hey, Terence, when you split it across 2 months, right, it isn't actually very accurate, right? And my reply is, why not? Because I took 2 months to earn the total income, All right, I can recognize it at the end of the second month, or I can choose to recognize 50% on the first month and 50% on the second month. Right, but in the case like now, I'm closing it. All right, so because I'm closing it, right, so what happens right now is I'm going to record the full profits on that trade. Right, which means I actually made $180 for the month of Feb. Right, but at the same time, it's going to set me back, right, for the month of March now. Why? Because that means I will have no such cash flow, right, for the month of March. So now for March, we're back down to 168, right? But for the month of Feb, we are now higher, all right, at 2,334. So we overachieved ourselves. Yeah. Okay. So this is, all fair game over here. All right. Now, so we're going to record it down. All right. And that's another profitable trade. All right, now, so that leaves us with 6 stocks position, all right, and one, right, portfolio puts, which is 3M, all right, and now my portfolio is totally exposed at $107,500, right, so now it seems like there isn't much room to be playing with, isn't it? Yeah, all right, so this month may just be a challenging month, all right, for me, all right, why? It's either, all right, I'm going to overstretch my account a little bit, right, to go after the cash flow, right, or all right, okay, opt, right, to finally miss, right, one of our cash flow goals, right. Now, so what am I going to do? I can't promise you yet, right, because it'll all depend on the deck of cards that the market throws at me, right. I can't predict, and I don't want to as well, so I react based on what the market is giving me. If I'm comfortable, right, with the exposure, if I'm comfortable with the opportunity that's given to me, I may decide to overstretch my account. Yeah, okay, but I'm not asking you to do so, right? But I'm showing you that it's a possibility, right? Because I've done this for so long, right? I have the experience and the familiarity with the stocks I'm trading. So it's actually important for you to know and understand well the kind of companies and the stocks that you want to trade, right? Because that gives you, that kind of comfort zone, right? When you handle the trades and how you go about making your money. Yeah. Okay. All right. Now, so it's a similar case of, if I take it from a local Singapore market perspective, right? If you try to trade every single stock out there, right, you may end up becoming a jack of all trades in terms of understanding the behavior. But if you choose to only trade, right, a basket of 5 or 10 blue chip stocks, and you keep looking at them, you really realize that you understand how they behave, right, their potential, their capabilities, and how they react. How much is considered cheap and how much is considered expensive. You'll know the ins and outs, right? And that's what I'm doing with the basket of companies that I constantly trade for cash flow. I know them well enough. So anything that happens to them, as long as the fundamentals do not change, right, I'm fully comfortable with those exposure. Yeah, right now. So let's look at how much our portfolio is worth now. All right. So as of now, right, my portfolio, have I included this month? No. So let's add it in. Right, so adding the month of Feb, right, my portfolio right now is worth $123,000. And do you know what, ladies and gentlemen? We started in the month of May, right? So that makes May, June, July, August, September, October, November, December, January, February. Right, so we are in month 10. All right, month 10. I've got 2 more months to go. But do you know what? I'm now at $123,000 in profit. All right. Can all of you leave a comment and actually tell me, right, for me to hit my annual goal of 24% per annum, right, how much more cash flow do I need to generate for the final 2 months? Right? Can anyone help me by leaving a comment? How much more cash flow do I need to generate within the next 2 months, right, to hit my annualized portfolio goal? All right, leave a comment if you can help me with the answers. All right, thank you very much. All right, now, so John is here saying $1,000. And John, you're right. And do you see what's happening right now? Yeah, okay, if you see what's happening, I've got 2 months, right, to try to eke out, right, this extra $1,000. So now looking at this, right, would all of you say that is actually possible, right? It's actually not difficult at all, right, to just achieve and eke out that $1,000 over the next 2 months. So then, all right, why am I highlighting this? I'm highlighting this because, all right, I want you to recognize that if the market does present to you an opportunity, go ahead and take it. All right, go ahead and make more than what you expect. But, okay, do not try to make more. Do not try to force a better performance than what you want, right? And increasing your risk. That doesn't make sense at all. Yeah, okay, since I'm only $1,000 away, right, the worst that can happen to me is that I'll end up missing the next 2 months of my portfolio cash flow target of making $2,000. That's what I may miss, right? But because I'm only $1,000 away from my annualized goal, right, I'm not about to risk or take excessive risk as well. So this is how you look at your performance and you try to manage accordingly, right, how you trade your entire portfolio. Yeah, all right, okay, now, so Facebook user, I don't know how to comment. All right, okay, I because I don't know who's making the post, all right, but it is easy for me. Nothing is easy for me, all right? Nothing came easy for me, right? That's the way I would say it. Yeah, all right? Everything came from blood, sweat, and tears. Yeah, all right. So it's about knowing your game, all right, and it takes time to know your game, all right. So by offering myself, all right, by being your mentor, what I hope is to pass on my experience and help you get your own game up to speed in the shortest time possible. All right. So if it isn't easy for me, I would actually like to be able to make it slightly easier for you. All right. So that's my aim over here. All right. In terms of being in my community. All right. So EL. All right. So EL is bringing up the idea. Hey, Terence, to be prudent, shouldn't we deduct the paper loss, right, from those that we have taken up? Right. EL, you're not wrong if you want to do that. But do you recognize, right, that, okay, I have not realized those profits yet, right? And when I decide to finally realize those profits, right, that position will be deducted, right, from that month where I result those losses. So now, right, yes, it may seem, hey, Terence, you're not recognizing those, profits and losses, but eventually it's going to turn out somewhere, right? But now I'm not killing that position. In fact, I'm comfortable with it, right? So technically, have I lost money? I haven't, right? I'm just sitting on those losses. Yeah, okay, so I'm not recognizing it simply because I've not closed the positions yet, right? And, right, you're assuming, right, you're now, by realizing it, right, you're choosing to assume that you're going to end up losing money. You realize where I'm going? Right? So you may be saying, Terence, that's a fair way of putting it, but I may argue that that's unfair in my perspective because, right, of how I trade my portfolio. Right? I don't intend to sell these positions, and I have full intention that they are going to end up making me money. So why should I recognize the loss right now? If I recognize them, right, when am I going to put them back then? Yeah, all right. So it's pretty much, right, an idea of how you want to handle your entire portfolio. All right. So how long are you prepared to hold these positions until, right, they recover? Right? Because if you are holding to a fundamentally strong company, and most of them are offering me income by paying dividends, you realize that, right? Most of them are offering me dividends. So am I not making money? I am, but I didn't recognize them. Right? So you realize I didn't recognize any of my dividend income. Right? If I did, I probably don't even need, right, to eke out the extra $1,000 now. I would have hit my target already. Right? But I didn't recognize those cash flows. Yeah. Okay. So it's a little bit of give and take. It's how you want to choose to look at things. Yeah. All right. Now, so I can even share this with you. One of the longest stock position I held until it broke even for me, right, came close to almost 2 years. Right. That's how long it can be. But if I choose to stick with companies that pays me dividends, then throughout the 2 years, I'm earning my 4-5% returns based on the dividend income. Right. So can you really say that the stock is not performing for me? Because eventually I didn't lose money, right? And while waiting, those stocks still made me 5% in terms of dividend income during those periods. See how you want to look at things, right? So back again, it's about knowing what stocks you're trading. If now I'm holding on to stocks like Amazon, like Google, then yes, it's a disadvantage. All right, why? Because I'm not getting anything by holding on to those stocks. Yeah, all right. So no worries. All right, no worries. It's all good. All right, now so you see the value that you're getting despite being free. All right, I didn't leave your question unturned. All right, I actually answered them. Okay. All right. No, unfortunately, I didn't see your name. All right. So can you go to streamyard.com/Facebook, all right, and hit the button so that you'll be approved again. All right. I'd like to know who's leaving the comments. Yeah. Beep. All All right, so Kingsley, all right, on top of EL's question, is it potentially they can still sell calls and earn premium while, waiting for the unrealized loss and breaking even? Yeah. That's what we've been doing, right? All right, because if you look at this, that's what we started recognizing, right, at the start of today's session. I sold calls. Can you see over here? I sold calls, right, on these couple of stocks throughout the month. And if you look at it, right, if you add up the total, right, I generated what? Almost $400, $300 or $400 in cash flow while selling those calls. And those were on stocks that I was holding. So can I say that the stocks were not making me income? Not really. Right? On top of the dividends, they are making me income when I get a chance to sell the call options while I'm owning the stock. So I have no fears in that. Yeah. Right now. So KSY, all right. So I do agree. All right. HBI came out, all right, with weaker than expected, numbers, right? But all right, I will hold on for a little bit more, right, and wait and see. Yeah. Okay. So for me, I'm holding on and waiting and see. Why? Because my exposure, right, in that stock is not huge. Right? What do I have? I have 400 shares at $9. So that's what? 9, 18, 27, 36, $3,600. I think it's okay. Right? I don't believe the company is going to go bankrupt because it owns brands like Champion, it owns brands like Hanes, all right, okay, which is apparel. All right, so you'll be familiar with those brands. Right? They are pretty strong brands. Yeah, okay, now, and of course, there's many more under the umbrella. Right? So I think the company will turn around, right? Just like many of the retail stocks, right? But they may need some time. So I'm just going to leave them there. All right. Now, so the only reason I'm not doing or cutting it right now is because of the cost of the share as well. Yeah. Okay. All right. Now, so we'll leave things to see. All right. So only time will tell. All right. Whether I'm going to end up recovering or I have to realize my first loss. Yeah. All right. Susan. All right. Thanks for bringing it up. All right. Kingsley, all right, thank you very much. I'll try to get my team to get to your email. All right, they may have missed it out amongst the many emails, all right, that has came in. All right, Andy, all right, the key is this, all right, if someone has brought up the HBI is not strong, the only reason I'm holding on is because, all right, I'm not about to give up yet. But if you ask me if I'm willing to take a new trade right now, I would tell you there are probably better opportunities. So why would you want to increase your risk, right, by trading a potentially flawed fundamental company, right? Don't do that, right? Because you have a choice. Yeah. Okay. All right. Now, so CVS, all right. Why would you do that? Because the stock has ran $5. All right. So what was cheap will no longer be cheap anymore. So not for me. All right. Now, so welcome, Kingsley. All right, so wiki over here, when we hold on to the stocks, will we have lesser cash in hand to sell the put options? Yes. All right, now that's what I'm trying to tell you right now, because my portfolio is worth what? $120,000. Right, so on margin, it means I can only hold a total stock amount of $240,000, $246,000. Right, so as of now, right, my portfolio is 87% exposed. Right, I'm comfortable to bring it to about 120, 130% exposure. So slightly leveraged, but not too much. All right, so that means right now I have lesser capital, right, to try to hit my goals. Yeah, okay, all right, but I'm not about to take on risk. So that's where I brought up I only need $1,000 more. Right, so provided they're good opportunities, otherwise I won't risk it. Right, so having said that, let's see what we can do today, ladies and gentlemen. Right, so what's on the table? I saw one. Something that I won't trade very often, but I think that there's an opportunity. So I'm going to go ahead and do it. All right. I don't know whether you're going to like it or not. All right. But I am going to do it. All right. So what am I going to do over here? All right. I am going to go after Google, ladies and gentlemen. I'm going after Google. All right. Why? Because after its earnings, right, I just felt that it came off a little bit too fast. All right. Okay. Now, so we're back at this support level over here. All right. I don't know if it's going to hold. All right, okay, but all right, we're going to look at it. So this is about what, $94, all right, and the recent low, all right, it's about 85. All right, so let's see what kind of premiums have we got. Okay, now, so for March, right, if I pick the $90, right, I can still generate about $173, all right, per share. All right, so I think that's good. All right, I think that's pretty good. All right, so I'm going to take a two contract exposure, all right, on Google over here. Nothing too big. Oh, sorry, wiki. I forgot to remove. All right, so we're going to sell the March 17. Oops, sorry. $90 puts. All right, so I'm going to sell two of them at 174. Let's see if I can grab it. Yep, I grabbed it. Okay, ladies and gentlemen. All right, so I just sold two of the March 17 Google. All right, $90 put options. All right, so two of them for 174. All right, so let's go look up, all right, our portfolio. All right, so that's trade number 64. GOOG. 17 on March, $90. All right, did this on 17 of Feb. All right, 174. All right, so now we're back to $342. Right, and what's my portfolio exposure? Right, 120. All right, so now I'm 90%, 98% exposed. All right, that means I can still go. All right, I can still keep going. All right, but the question is there anything, right, that is worthwhile, right, for me to keep adding? So I don't add because I want to. All right, I add because it does make sense. Right, so I need to be able to make sense of the valuation, right, before I will take any actions on that stock itself. So let me go ahead and have a quick look. All right, right now. I already have something on Pfizer, so I'm not going to do it. Yes, Susan. Right, Google doesn't have a dividend, but I'm comfortable with Google, and I think that it's been sold a little bit too far. Right, so I don't expect it to go much further down. So I'm taking a chance over here. So calculated risk. Nope, this stock is too expensive right now. How about Micron? Micron came back down. So Micron came back down, right, and now it's hitting the support, resistance, then support, 58. Can it go down much further? It probably can. MDT. No. Nope. Let's see what's Micron's valuation right now. It's about 10 PE. 59. 55. Let's see what I can get for 55. 95 cents. That's pretty good. Is there any earnings? Earnings doesn't come to 28th of March. So our options will expire before the earnings. So I'm good for that. All right. So let's go after Micron. All right. So I'm going to go after Micron, the $55 puts. All right. And I'll go after 3 of those. $96. Yep, I'm done. All right, so here we go. All right, so the market sold me 3 of the Micron $55 puts for 17 March at 96 cents. All right, so I'm done. All right, so let's go ahead and record that down. $65. 3 Micron 55. 1996. It's $144, is it? No, because I divided by 2. I should no longer divide it by 2. Man. Yes, I made 804. Yes. I made 804 right now for this month. All right, now, so some of you want to have a look at gold, right? I haven't tracked it for a while, but looking at it, right, I kind of figured, gold fell back off. GOLD is Barack Gold, right? 15. Nah, I'll probably wait a little bit more, right? Because it's just started falling, right? And it's volatile asset, so I'm not keen, right? I'm not too keen, right, to try to jump in too fast. But AT&T does look interesting if I can get some premiums. So let's have a look, right, at the 1850 line. There's no 1850, so there's only 18. So is it good enough? 12 cents. It's a pretty cheap stock, so let's go after it. All right, so AT&T. All right, I won't take too much. I'll just take let's take a 3 exposure as well. AT&T 18, so I'm going to sell it for 12. All right, voila, done. I think I'm done for today as well. All right, so AT&T March 17, $18 puts. I sold 3 options, right, for 12 cents. All right, done. All right, righty. 66. 3 options, AT&T, $18, 12 cents. All right, that's $36. So that puts me at $840 for this month. All right, so let's stretch this up. All right, so my portfolio right now is exposed at 110%. So I still have, all right, some leeway with my capital, right, to continue to allocate, right? But for this week, market has not come off enough yet. So we're going to wait and see. All right, okay, so we're going to come back next week, all right, and then we see what kind of moves, right, we can have and what kind of moves we can take, all right, to continuously add more cash flow. Right, J&J is 23 times earning. I'm not paying a 23 times earnings to buy Johnson & Johnson. No, it's never growing at 23 times. All right, okay, or 23%. No, that's expensive. All right, that's expensive. So no go. All right, now, so with that, I think I'm done for today. All right, so let's come back next Friday, ladies and gentlemen, and let's see what the market hands to us. So as of now, right, we have achieved another month of our cash flow goal. So that's 10 in a row. That's 10 months in a row. We're going for the 11th month. All right. It's now gotten more challenging because I've got less capital on my hand. All right. But stay tuned. All right. Keep coming back to see if I'm able to do so. All right. Now, so with your help over here, just one last shout out. All right. Can you please hit the like buttons? Because the number of people watching this live versus the likes, right, it's downright measly. Right. It's measly. All right. So, it's not a case of whether I'm hard up for the likes, but it's more of I do want to make sure that running these sessions, I want to know that the information is actually being appreciated. Yeah, okay, because I'm actually giving out. Yeah, okay, I want to know that it's benefiting you, right? Because if it doesn't benefit you, then it's pointless for me to continue to do so, because it also shows from your lack of likes that I'm not presenting good information. All right, so I don't want to do that. All right, so if you do feel so, that I'm helping you out, please hit the like buttons, all right, before we end the webinar, the Facebook live session. All right, so that will help. All right, thank you very much, Wiki. All right, so yes, despite it being free over here, that I've been running for close to 10 months on the new portfolio and more than a year for the previous portfolio, all right, I'm continuing to do so, all right, because of your support. All right, so come back next week. All right, and I hope we'll be able to increase the efforts and the cash flow as well. All right, and I'll see all of you next week, okay? For those of you coming to the bootcamp tomorrow, I'll see you tomorrow. Yeah. All right. Bye for now. Have a great weekend ahead. All right. Thank you, everybody. Bye-bye.